Okay, good afternoon. In this video, I'm going to be explaining what NOI or net operating income is. This is one of the most important things you need to know as a real estate investor or somebody interested in learning how to invest in real estate. So this video, I'm going to cover all the basics, what you need to know, what goes into it, and how you use the NOI or net operating income to actually value a commercial piece of real estate. So if you have any questions about the NOI, how to calculate it, or if you think that real estate investing sounds pretty good and you want to learn more and get involved, just go to callseth.com and we can set up a quick 20 or 30 minute call. It's over Zoom, we can see each other, it's face to face, and we'll make sure all your real estate investing questions are answered. So NOI, why is knowing the NOI so important? Well, number one, we need to know the NOI for the income approach. And the income approach, if you've watched the other videos, is how we value these large commercial properties. So if I'm looking at, let's say, a 400 unit apartment building, we are valuing this property, or an appraiser will value the property using the income approach. And we'll go through that formula in a little bit. Also, it's important to know your cash flow. You know what? That kind of rhymes. We should make a t-shirt, know your cash flow. Cash flow. This is so important because going into a real estate deal, you need to have all your numbers strained out, and you need to know how much cash flow this property is going to spit off after the expenses. And this goes into the NOI or net operating income. Now, there is a mistake a lot of beginners make when calculating the NOI, and I'll make sure I cover that because it's a pretty big mistake that I see a lot of people make. So we need to know the NOI because this is how these large commercial deals are valued. And also we need to know your cash flow. I like that slogan. You know what? I might trademark that, know your cash flow. I'll make a mental note to myself to keep using know your cash flow. And if you want to know your cash flow, and if you want to know more about real estate investing, just go to callseth.com and we'll set up a quick call. So how do we calculate the NOI? Well, the NOI is our net operating income. So it's our income, the cash flow the property is producing after expenses. And there's two sides to it. So number one, we have our gross rents, or gross income, you can say. Now, gross income will cover the property rents, but it will also cover other sources of income. So let's say we have late fees. We have application fees. We also could have valet parking. We have laundry, all sorts of things. So any sort of income the property is producing, this is going to be included under gross income. Now, on the other side, the other part of the equation is our expenses. Now, expenses can be staff. So these large commercial deals, they're going to have full-time staff on premises. We're going to have maintenance. So maintenance and repairs. We always have repairs in these properties. Things break, things need to be replaced. What other things do we have? Staff, insurance could be one. We could go on forever with these lists, and when we are underwriting these properties, making sure it's a good purchase, you should see some of the spreadsheets that are created. They get pretty in depth. But for this, you understand, so gross income is all the income the property is producing, whether it's rents. Rents will be the biggest one, but we also have parking, laundry, that sort of stuff. Then on the expenses side, we have staffing, repairs and maintenance. So when we do a turn of the property, insurance, anything that is an expense related to that business, which in this case would be a multifamily real estate investment. Okay, so what do gross rents and expenses have to do with NOI? Well, there's a formula for calculating the NOI. So the formula goes like this. So the NOI equals, so we have gross rents minus the expenses. And that's going to give us the NOI. So let's make up an example. I think I said a 400 unit property before. So we'll just go with that. So let's pretend we have a 400 unit property. And let's say we have the gross income generated by the property is $10 million. Now, when we're calculating this stuff, we don't do it per month. We do it on an annual basis. Month to month, you get some fluctuations and all that. And whenever you are doing underwriting, you want to make sure you're doing it on a yearly or annual basis. So $10 million a year. Expenses, let's say this is running at 45%. So we'll have 4.5 million. Oh, you know what? Let me do this. So we have $10 million gross rents. We're going to subtract $4.5 million of expenses. So we're bringing rents, parking, valet trash service, rentals, all that's application fees, late fees, that equals $10 million. And then we have our expenses, so we have our staffing, we have our maintenance, we have all the repairs, we have insurance, we have all that stuff. That's going to equal $4.5 million. And that gives us a net operating income of $5.5 million. This property is pretty textbook. 45% in terms of expenses, that is a pretty textbook example, if I do say so myself. And if you have any questions about this, just go to callseth.com and we can set up a quick call. So we know the NOI, but I did mention that mistake that a lot of beginner real estate investors make, and that is debt service. Now, debt service, I don't even know how to write an R. So debt service, what is debt service? Well, debt service would be your mortgage payment. So most often you're going to leverage these properties. Lenders, banks want to loan you money for these properties because they're so stable. Especially with the larger deals, banks would rather do a large mortgage than do a couple single family homes. And you'll find that the terms and all of the discussion surrounding that debt changes drastically when you go from a single family home to a large, let's say $45 million piece of real estate. So debt service. So you know how I was saying there's the gross income and then you have your expenses? The mistake a lot of beginners make is they include their debt service, so their mortgage interest payments, they include that as an expense, but that's not the right way to do it. The reason is, let's say we're selling a piece of real estate. Let's say we're selling this property. I'm going to advertise on the pro forma. I need to disclose to the buyer all of the property financials, so that way the buyer can decide whether or not it makes a good purchase for them and if they want to move forward. So this is basic accounting, but let's say I have a rather large mortgage on the property. If I included that in my expenses, that's the debt I use to acquire a property has nothing to do with the functioning of the property itself. That is my personal decision. Somebody can acquire a property for all cash. In that case, there's going to be no debt service, or I can leverage up to, let's say, 80%, and that's going to change things on the expense side if I included it. And so that is the buyer's prerogative. Actually, that's the big word for today. So so this session is brought to you by the letter P, P for prerogative. So we don't include debt service in the expenses because that's going to skew the numbers, and that's not, so it's called below the line. So we have above the line, so we have gross income here, and we have minus expenses. That's going to give us NOI. Oops, I drew the line. And now we have a line here, and this is why you've probably heard the term, or maybe you haven't, of below the line. So debt service is calculated below the line. I was going to write out service, but debt service is included below the line. So remember, for net operating income, we have to know your cash flow. We take our gross income, all the rents, all that stuff, subtract our expenses. That gives us the NOI, but no debt service. We do not include mortgage payments. That is done after the fact, because that's going to differ based on each and every buyer. So I hope this helped explain what net operating income is. If you have any questions about real estate investing, NOI, debt service above, below the line, any of that, or if you want to start investing in some of these large multifamily deals, just go to callseth.com and we'll have a quick call. Thanks a lot and have a great day.